Hello everyone and welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 5th, 2025, we're dissecting the EURUSD currency pair, starting with the latest news and then diving into the charts. Recent headlines indicate EURUSD is currently trading in negative territory, hovering around 1.1550. This slight dip is attributed to a decent comeback in the US dollar, likely spurred by recent positive US data. However, it's crucial to put this short-term movement into perspective, especially when we look at the broader picture on the daily chart. Over the past year, EURUSD has seen a significant increase, up over 5.29% from its level around 1.097 a year ago. Zooming into the daily chart, we can clearly see this long-term bullish trend unfolding. Despite some notable pullbacks, the general direction has been upward since early 2024. Key support levels on this long-term view have emerged around the 1.01 to 1.02 mark, which proved a strong base in early 2025. Another important support zone appears around 1.04 to 1.05, active in late 2024. Looking at resistance, we saw significant hurdles around 1.09 to 1.10 in mid-2024, which were eventually broken. The market then pushed higher, establishing new resistance around 1.16 in June and even reaching above 1.18 in early July 2025. The overall long-term trend remains upward, suggesting that dips could be buying opportunities if fundamental conditions support it. Let's narrow our focus to the more recent price action, specifically from late July through early August on the 15-minute chart. Following the significant drop at the end of July, where price fell from highs near 1.178 to lows around 1.140, we observed a sharp rebound. The August 1st candle on the daily chart, which you can see here, shows a massive surge from an open of 1.14213 to a close of 1.15842, a gain of 1.43%. This strong move effectively negated the prior short-term bearishness, indicating significant buying interest at these lower levels. However, since that August 1st surge, EURUSD has largely been consolidating, as evidenced by the smaller movements on August 3rd and 4th. The news reports today's price, August 5th, is slightly down, confirming this short-term sideways to slightly negative bias. This suggests that while the long-term trend is up, the immediate momentum is balanced, potentially due to profit-taking or renewed USD strength, as mentioned in the news. Transitioning to the 1-hour chart, we can gain a clearer perspective on this recent consolidation. Notice how the candles after August 1 ST's strong close have mostly stayed within a tighter range, struggling to push significantly higher than the 1.158 to 1.159 area. This suggests that while the bulls made a strong statement on August 1st, they are currently facing resistance around these levels. Short-term support appears to be holding around 1.154 to 1.155, preventing a deeper pullback for now. A break below this 1.154 level on the 15-minute or 1-hour chart would signal further short-term weakness. Conversely, a sustained break above 1.159 could indicate a renewed push towards the July highs. The volume on the 15-minute chart also shows that while the August 1st surge had strong volume, the recent consolidation has seen average to slightly lower volume, indicating indecision. Traders should watch for an increase in volume accompanying a break in either direction for confirmation. So, what's the outlook for EURUSD? Short-term, the pair is somewhat neutral to slightly bearish due to the recent USD strength and consolidation. If the US dollar continues its comeback, we could see EURUSD test lower support levels, possibly revisiting 1.145 or even 1.13 in a more significant pullback. Long-term, the sentiment remains bullish, reinforced by the year-over-year gains and the strong bounce on August 1st. A sustained break below the 1.13 major support level would turn us bearish in the medium term, but this is less likely to happen, 20% likelihood, unless there's a major economic shock. The likelihood of EURUSD continuing its upward trajectory towards the 1.18 high is moderate, 60%, especially if European economic data improves or US dollar strength wanes. A move past 1.18 could open the path to historical highs, but that would require substantial catalysts. For traders, keep a close eye on the 1.154 and 1.159 levels for immediate trading signals. A strong candle closing above 1.159 with increased volume would suggest going long, targeting 1.165, then 1.17. Conversely, a break below 1.154 could open up shorts towards 1.145. Always remember to manage your risk and stay informed on upcoming economic data releases from both the Eurozone and the United States. These releases, such as inflation reports or central bank statements, can significantly impact currency pairs. Thank you for joining us on Explain the Charts. Don't forget to like, share, and subscribe for more in-depth market analysis.